Hello friends, welcome back. This video is so urgent, I've not brushed my teeth, just got up, I got into a call all for you guys. Why is the entire crypto market crashing but DFI token is up? Is there another 10 times from here? Again, this video is not sponsored. I approached them a few months ago. I'll link my older videos below. Since I've been staking DFI from 30% to 100% to 40% returns a year, so there's great capital gains and great cash flow. And those who followed, like all my kind of investments I make, is a wild ride, but it's rewarding at the end of the day. I hope you enjoy this video. Hi, Dr. Julian. Welcome back to the channel on such a short notice. There's a lot of requests to get you on because DFI is mooning right now while Bitcoin is crashing. So anyway, thank you for coming back, and let's talk about the Bitcoin crash and why DFI is performing really very well.
Ken, looking forward to being back and talking about those things.
So why is the DFI mooning and going up like mad, but Bitcoin is crashing? What's up with the whole crypto market crash right now?
So in general, in investing, you always have two concepts. You have the concept of value and you have the concept of price. And in general, price over long time moves towards its value. I think that's a very general Warren Buffett quote. And obviously in between, you have a lot of emotions, and emotions make the prices fluctuate up or down massively. And so I think on Bitcoin, let's start with that. I think over the past, especially 2 months, we have seen a lot of hype in Bitcoin without the actual value increasing. So what do I mean with this? I didn't see any extra utility in Bitcoin. There just isn't much extra utility. Yes, we have seen Taproot, some privacy, but that's just smaller parts. Bitcoin is still as rare as it was before. There's no extra there. But I think a lot of people have expected that the Bitcoin futures ETF is going to do a lot. There were a lot of prediction models like the stock to flow model, the floor model. A lot of people were expecting Bitcoin to do really well in inflation. And all this, especially October, November, led to a price increase from the mid 40s to the mid 60s. And I think people have just come a bit to the realization that Bitcoin is probably not as much influenced by inflation as it is by everything else. Yes, inflation influences it, but it's relatively small in comparison to all the other price swings. I think a lot of people realized the Bitcoin futures ETF is not as powerful as a spot ETF would be. And so a lot of people lost hope there. Then obviously you have always a bit of a fear kind of mongering with Evergrande in China. And so all these things at the end kind of brought people back to reality. And so if you just look at the price of the beginning of October in Bitcoin and where the price is right now, it's actually slightly up now. So if you just cut away all this hype in the middle, I think we're on a really good track. I think people just are a bit overly optimistic from what happened over the past 2 months and forget that a lot of it was actually hype, not value. So that is kind of the Bitcoin topic. Yeah, before we go to Defichain, anything else you want me to elaborate there or see that? And maybe let me add one thing. So just because we had this setback, I still think if you look at this on a long term, and I know that like your audience, because I watch a lot of your videos, I see a lot of the comments. I think your audience has this long time horizon. They are okay in betting on things that take a little bit to kind of materialize. So I would really have the patience there. I still think that long term, this is totally fine. This is just a short term kind of dip.
Yeah, I think Bitcoin is still a perfect use of store of value. The only reason is when market crash starts coming, and a lot of people start questioning, is Bitcoin the real thing? And yeah, they go all questions about it. But I do think if you draw a straight line up, there's always this volatility in between. So I think we are just returning back to mean. Yeah. So the next question is, what's up with DFI, man? It's performing so well, and congrats to the wonderful project that you founded, and thank you for letting me be part of it. Yeah.
No, man, thanks for you being part of it. Really, I think I think that the key is always to understand in a blockchain, in a community, every kind of person that's part of the community brings value, and everyone just makes the community grow. So for me, I was just some person that 2 years ago started this with Yuzen, and now it's I mean, I see so many people like who are driving this. It's so exciting. And so, yeah, so thank you so much for you also bringing exposure to that. So, yeah, look, let's put it back to the formula. What value is? Value is three things. Value is the utility of something. It's the rarity of this utility, and it's how many people are kind of about the rarity and this utility. So the more utility, the rarer something is, and the more people are involved, the more valuable something is. It's a very common sense. And I think Defichain, especially over the last month, had this massive upgrade of a concept called decentralized assets. So these are things like D-Tesla or DUSD, D-S&P 500, D-MSCI. So a lot of these decentralized assets that are coming to Defichain. And I think this extra utility, and it's a massive chunk, adds a lot of value suddenly to this entire blockchain. And then suddenly a lot of people now see this extra value and they're like, I really love this. And so if you look at this formula, the rarity is still the same, but suddenly you had this massive utility jump, and suddenly you had this massive community growth. And so that is where this extra value is coming from. And that's why the price of DFI measured in dollars has pretty much doubled over the last, 2 weeks? And against Bitcoin, I think it has gone up like significantly insane. I think 50% or something. It's been a heck of a ride.
Yeah, it's amazing to see the price go up and sustain at such levels.
Can I mention one thing here? We haven't even gone live. So everything goes live actually in 2 days, December 6th, right? So now this was just a code upgrade and everyone can kind of play around with it. But for the things to actually start going live, this is actually going to happen on Monday. So I'm just going to be totally excited to see what's going to happen next week, when suddenly, in my opinion, that's when the real kind of rocket ship is taking off, because that's when decentralized assets really going to happen for all the people. So that's going to be, I'm really excited for what's going to happen for next week, and obviously for the rest of the year and the next couple of months.
Next week is so exciting. I see a lot of my comments in my videos and in my tweets talk about liquidity mining at 10,000% or something like that, right? I'm not too sure. So, well, that's going to be pretty cool on DUSD, right? Or something like that.
Yeah, so the way this works, and this is the concept of decentralized assets. So instead of, for example, if you want to bring Tesla to a blockchain, you would have to lock up a Tesla share. Or if you wanted to bring a US dollar to the blockchain, you would have to lock up $1. So there's always this question, who's locking it up and can I trust this person? So the way decentralized assets work is, instead of locking up a security, you lock up cryptocurrencies. So in the case of Defichain, which is built around the Bitcoin ecosystem, you can lock up three things. You can either lock up DFI, or you can lock up Bitcoin, or you can lock up stablecoins. And the reason we allow also to lock up stablecoins is simply to stabilize everything. But to be honest, most people lock up DFI and Bitcoin. This is the major kind of things. And then via a so-called price oracle, and this is a price feed from the large exchanges, it's determined what these things are actually traded for in the outside world. So if we use, for example, the US dollar, then on the US dollar, there's price feeds to the various exchanges, and it tells you this is what, for example, DFI or Bitcoin is trading in the outside world. So these oracles know, Bitcoin is traded at $45,000. So if there's one Bitcoin in this vault, we call those vaults, it knows that this is actually corresponding to 45,000 DUSD. So those DUSD that are being created are not backed by actually dollars. They're backed by cryptocurrencies, and in this case, by the reference price to the oracles. And so that is the exciting part about those decentralized assets. And the same works with D-Tesla and D-S&P 500 and D-ARC and D-Silver and D-Gold and whatever decentralized asset we have. You don't have to trust that anyone holds those assets. They're actually completely decentralized. There's no one who can take them away because they're locked in by the blockchain itself. And that's the real revolutionary part. And I think that's why there's so much excitement around that.
By the way, congrats on that. I see a partnership with NASDAQ. You had they as a price oracle, right? So congrats on that. That is a very big step. I personally feel that. Okay, so the next thing about, I saw this tweet somewhere. If I could find it again, I will show it to the audience. The difference with DFI compared to the rest of the ecosystem is that DFI doesn't have smart contracts. With smart contracts, you are going to get bugs. You know, the amount of money being stolen off smart contracts every year increases over and over again. So the difference is, what DFI, there's no smart contracts. So what does this mean?
So these tweets are not fully correct. So Defichain is built, basically it's a fork from Bitcoin. So it uses the same principles. Bitcoin also has smart contracts, but it has it in a very limited form. And what I mean with this is the following. On Ethereum, you have, and this is the differentiation, Turing complete smart contract. That means on Ethereum, you can program whatever. The difficulty is if you can program whatever is also possible. So sometimes it's very tricky to tell people you can only do these things, but you're not allowed to do these things. And many times attackers on these Turing complete blockchains, and that's why you see so many attacks on Ethereum, Binance Smart Chain, and so on, is because there are so many possibilities. So attackers have such creative ways to kind of, and it's not even attacking, to be honest. It's just that just like a contract, right? If you sign a contract, if you're a good lawyer, you know how to kind of work around these contracts. And it's the same with good programmers, right? So if these contracts in the real world would be 120 pages, and on top of it, it would be written by someone who doesn't really know exactly what to do, a professional lawyer is really good at attacking that contract. And the same thing happens in the Turing complete world. So Bitcoin doesn't have this. Bitcoin has non-Turing complete. That means only a few things are possible and nothing else. Now, some critics always say this limits Bitcoin, but at the same time, there's also the reason why Bitcoin is so super safe. Defichain is a fork and it's doing the exact same thing. It just expanded the smart contract capability slightly, but it's still non-Turing complete. So that means the risk of an attack vector, the risk of something going wrong is extremely tiny, simply because you cannot do all these things out there that you can do on a Turing complete blockchain. So when someone says there are no smart contracts on Defichain or on Bitcoin, it's actually not correct. What they're talking about Turing complete smart contracts. This is true. They are not part of Defichain, but that's by design. I also want to highlight one thing. This obviously limits creativity, and I want to be clear on this. That is why actually the community voted on upgrading Defichain to keep the base layer non-Turing complete, so super safe, but to create a second layer on top, which is actually Turing complete, see it like a sandbox, see it like an experimental kind of stage. And so whenever something works there in the experimental stage, it could be then taken down in the non-Turing complete world. And so this was voted on actually, I think, last week. It had a major approval and support from like all the users, because this makes sense, right? So you keep it super safe on the base layer and you do all the experimentation, all the crazy stuff that could actually break and could cause issues, but you leave this on top. And I think that is where a lot of blockchains really have issues, because they can actually have all these dangers and all these attacks actually on the main layer. And so that's a humongous difference.
True. If I'm looking at stats, like Turing complete projects usually have hacks like in the hundreds of millions of dollars, but non-Turing complete was like zero or something like that.
It's just very, very difficult to attack, right? So do I know if there are any attacks out there on non-Turing complete projects? I don't know, but it's just really, 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 really difficult to attack those things. Yeah.
True. Okay, so now let's go for the big thing. I see this hashtag everywhere, road to 50. That means DFI to $50.
That would be the So the idea, and I did this calculation in a video, and I kind of calculated and estimated where would I see a long-term fair value for Defichain from today's perspective. Right, so with a constant growth, with the utility that's there, and I'm kind of talking about obviously the next couple of months, maybe the next year. So I talk about this hype cycle. And so at the moment, DFI is trading between $4 and $5. I don't know where it exactly fluctuates with the volatility that we have right now. So we're talking about a 11, 12x from right now. And so how is this possible? Well, it is possible because I foresee these decentralized assets are going to create a liquidity squeeze. They're going to suck up so much liquidity to create those D Teslas and DUSD and DSMP and whatever, these D bonds, D gold, whatever you want to create on there, right? And people can vote every week to add more of these tickers. So it's just going to get more and more and more. And so just based on this calculation, you're going to lock up so much DFI that there's going to be such a squeeze that people will not be able to sell them anymore because they keep them in all those vaults. So buying them is going to get more and more and more expensive. And so the fair value that I see here over the longer period of time is about $50. And so that's where the road to 50 is coming from. Now, obviously, this has a lot of scenarios and a lot of important kind of ideas in there. This is important, but I see this as very, very possible.
This is good. Thanks for explanation. I have one suggestion. Like, if you are looking at adding stocks to to buy as decentralized assets, we could look at like the stocks with the highest volume, because that shows the most interest in those stocks, and we could just plant it into we could plant it into decentralized assets. I see ARKK inside there, but ARK is getting a lot of shit these days. So I was just thinking
No, so the way the original kind of the community started with 15 tickers, right? And so all these 15, they were like, yeah, sure. Someone says this makes no sense. This makes sense. But I think as a whole, those 15, they cover pretty much all the asset classes. They cover all the various kind of ideas. And this is just to start it, right? And to have it like in the first months, from January on, every week, all the community members can actually vote on what new tickers should come on. So we're going to have 50 more tickers over the next year. And I think that's, and that's where then suddenly we're going to have 60, 70, 80. So I 100% agree with you. I think the original kind of selection was really more on, let's just get some that are like well known. And then over the next year, let's see. I don't know, whatever, right? Maybe some people want to have more Chinese stocks. Others say, we don't have any European stocks. We don't have any North American. So let's see. I mean, everyone can just again, it's an open system, right? People can select and choose.
Yeah, I will vote no for the Chinese stocks. I thought.
Yeah, everyone's gonna have a vote there.
All right. Okay. So the next thing is, let's talk about total addressable market for generally DeFi. Like, how big do you think it is? Because personally, in my view, a lot of people are not trusting the traditional systems, the traditional banks, the legacy systems. And I think DeFi is a big, big space. You see people talking about funds in the US. It's so hard to get money in and out. There's so much complaints. So how big do you think this entire space will be?
Yeah, I mean, if you look at the current DeFi market right now, we're talking about $100 billion kind of dollars. That's kind of all the DeFi kind of counted together. Maybe you could say it's a bit more, but let's say it's around 100 billion. I see this that at the moment, the entire traditional financial ecosystem, obviously we're talking about trillions of dollars. I don't see that these decentralized assets are a replacement of real world assets. I mean, they are different, right? There are different rules. For example, decentralized assets, they cannot capture dividends. Real world assets, for example, get dividends. So there are differences, right? They are not the same. This is also important from a legal standpoint, right? Otherwise, if they would be the same, these decentralized assets would be a security like a real world asset. So there are differences. What they are backed by, who can issue them, like how they are basically priced, right? So there are differences. What I see is that while these real world assets and especially first world countries, institutional investors, they will probably stick to those real world assets. But especially a lot of frustrated people in the first world countries, right? And there are a lot of them. They're going to move into those decentralized assets. A lot of countries that don't have access to those traditional markets, they're going to move into those. And so if you look at that, I think there were like guesstimations that this entire kind of decentralized asset market could easily go into the 5 to 10 trillion dollars. So, I mean, sure, if you look at all the assets that are out there, right? I mean, you just look at Tesla. Tesla is $1 trillion market cap, right? So we're just talking about a single company. So, and then you have so many others, right? You have gold and so on. So not everything obviously will be represented in a decentralized world. But I think a 5 to 10 trillion is I don't think it's a conservative guesstimate. It's also not an aggressive one. I think it's a super realistic one. And I think at the moment, there's massive upside basically.
Yeah, but I actually usually get a lot of comments from people from the third world. You were talking about the first world. I have people coming from the third world, from Pakistan, from Africa, from really funny places, and they ask me, how do I buy Tesla stock? Oh, I do think this might really help them a lot going to
I
the
mean, it's
decentralized
so
asset.
easy. They can literally super easy buy D Tesla. I mean, all you need is you need DFI. You get the DFI either from one of the exchanges. Again, hopefully at the moment, especially, there's a lot of exchange requests actually because of these decentralized tokens. Obviously, they're very interested. Hopefully, we can add more and more exchanges there. At the moment, we have Bittrex, we have KuCoin. Yes, they're not the largest exchanges, but they're also not the smallest. Obviously, I'm the CEO of Cake DeFi. I'm super happy if you use Cake DeFi. We use the DEX to actually buy those. So if you buy by us, you actually, we're just basically a service provider, so you would actually be buying it on a decentralized exchange. You need DFI to start in the system, and then from DFI you can go anywhere. You can create loans yourself, you can create US dollars yourself, you can buy on the DEX directly, so you can switch your DFI into D-Tesla directly, you can liquidity mine with D-Tesla. So that's the open ecosystem, right? You download the wallet. No KYC needed. There's no verification. Yep. Just download it. It's completely free. It's open source. You need DFI to get started. That's it, right? And you are in the entire ecosystem. So that's the beautiful part about this. Yeah. So again, I think that's going to be such a game changer over the next couple of months.
I do think so. Like you add in the factors of non-Turing complete, which I personally like a lot, and you add on with, you can buy decentralized assets, and all this adds up to a very, very far future. So just to wrap up this quick video, anyway, thanks for coming this on a short notice. Next year, there's a lot of crash. The last question is, next year there's a lot of stock to flow model. The Bitcoin is going to crash, blah 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 blah. So if you are in the space of a retail investor, do you have any advice for them?
I have big doubt that the stock to flow model or the floor model or any traffic chart analysis, technical analysis, early blockchain analysis, that these models really work. I mean, if we can agree on one thing, then I think we can agree on that the only thing that never changes is change itself. There's always change. And actually, Darwin said, evolution is all about the fittest to survive, and the fittest means the most fit to adapt to change. So I just don't understand how these rigid models that cannot predict emotions, they cannot predict demand, right? They cannot predict supply. Yes, they can predict the flow, but they cannot predict the emotional drives, right? They cannot predict regulation. I just don't believe that these models work. I think these models are really nice for general trend, right? But I would be very skeptical in trading these models or investing in this. The only successful investors that I have ever met are people who are long-term investors. All of them, right? You look at Elon Musk, sure, Elon is selling stocks right now, but that is not because he wants to. That's because he's forced to, right? There's no other choice. But otherwise, he always mentioned he's the first in, last out. And he has done this all the time. He is buy and hold. And like, you can look at anyone, whether you like Warren Buffett or you hate him, it doesn't matter. He is a buy and hold investor, and he's heck of a successful investor, right? So I promise you, any successful investor doesn't give a crap about what all these chart technicians say, what kind of the media says, right? Or what kind of any macro, micro, whatever says. They understand that if they spend time in the market, it's way more powerful than trying to time the market. And I would highly recommend that. It's my philosophy. I would really pass this on.
Exactly. I think if you I usually have two accounts. I have most of my money is in my main account where I do not touch. You are right. Like, you just buy in the whole, do nothing. And sometimes we humans have some itches here and there. So you can just create a small account to trade. Right.
Anyway, of course, because if you can keep your emotions calm, that will always make you win. So if you need to get this little, if you need to scratch your own itch and you're like, I need to trade a little bit, sure, but do this with a small amount, right? Yeah. That is the key. So yeah, just stay cool. Focus on the long term. Take a look at Defichain. I think it's such a unique position right now. And I mean, again, results always speak louder than any opinion. And it's such an amazing community. From my side, really, I want to say thanks so much, Ken, to you, but also so many from the entire Chicken Gang, because like we get so many messages who write us, hey, Chicken Genius brought me into this. Like, I know about this. I'm so thankful to him. He has the best investment advice. Like, I know nothing of that is financial advice, right? But like, I think it's so important when you share transparently what you do. So hey, thanks so much, like, for all that.
Awesome. Thanks for the advice and thanks for giving an update to the DFI community. I hope they like this video, and thank you for taking your time off for this quick video. So thanks, Dr. Julian.
Thank you.
Did you learn something from this interview? I certainly did. If you are interested to invest in DFI, I'll put the links below. See you to the next video.